Today, I'm going to go over some of the most cold, hard facts you need to know about crypto today. No BS, no fluff, just honest truth. Now, I know some of you guys are experiencing quite a stressful time right now. When it comes to money, not knowing what's happening with it is just an absolute head scratcher. I mean, it's obviously stressing you guys out. I know, I see it in the comments. And most importantly, in a minute, we'll look at some of the sentiment numbers. But yeah, it's typical crypto A-class manipulation right in front of our eyes. And it's not a good feeling when, again, you have some of you guys, you know, house mortgages, and you guys have your children's tuition, and you have a lot of your hard-earned cash in the market, okay? But we're going to go over the numbers, and I hope in some way, shape, or form this will provide some clarity to you. Now, before I even begin, I must say, for those of you I kind of indirectly spoke to, where maybe you have put too much money in the market, maybe you took the second mortgage out, maybe you sold off the diaper collection you were holding off on, or maybe you sold or pawned that Pokemon collection you had since you were 12, whatever it may be, if you've overexposed yourself, so much so where you're extremely stressed about the money that you may have potentially lost, please learn, when you eventually go back to break even, and I do think that's likely going to happen, so I do think the bull run is to still happen, you probably should take that risk off the table, okay? Because if there is, for whatever reason, a pump and then a continuation of a crash, you're going to, of course, be back to square one again where you feel right now. So take it as a lesson, if anything, and when it does come time to go back up again, know what you've learned here. Do not forget it. Now, second of all, I must say, touch grass. If I didn't have a crypto YouTube channel, I would literally right now be taking everything offline. I'd be going and coming back to crypto in a month or two and just have updates once or twice a week. Just check what the state of things are. I wouldn't even check my portfolio. Matter of fact, right now, I haven't even checked my own portfolio in around 2 weeks. I know it's going to be down. Why put myself through the additional torture? So I know you don't need to be reminded of this, but the fear and greed is a score of 10, which obviously is not that good. But the thing is, this hasn't happened too many times in crypto's history. Besides the current day, actually only 6 times since 2017. And as a matter of fact, the last time this occurred was back in the FTX, Luna, Celsius, and the whole US banking collapse. So that was like true difficult times. So I believe the reason why we can sort of sit here at like $78,000, $80,000 and have such a low fear and greed score is because the long-term investors like myself are fed up. We're tired, we're exhausted, and that's 100% because of market manipulation. And the new holders, the newcomers, particularly looking at this chart here, which is the 1-month Bitcoin holders, are in substantial realized, not paper, but realized losses. These guys came into crypto buying Bitcoin at 100,000, maybe even up to 110,000 to the very top. And now they've seen their portfolios diminish 10, 20, 30%, and they've realized the losses because all they've ever known is fear and panic. At seemingly such a good time, I mean, there's so many bullish announcements and updates, catalysts. Any other time in crypto's history, this would have propelled us. But I think, given that the exhaustion mixed with the confusion and the fact that we now, as a cherry on top, have the uncertainty around the tariffs, particularly that we don't know the lasting impacts it may have on the US economy as well as the global economy for that matter, has meant even the ETF purchasers are now offloading their Bitcoin out of pure panic. Because if you think about it, the ETFs are just simply people like you and I, regular people buying crypto, but just via a different means, selling off out of panic because of the tariffs, because of the macro news. I mean, things are up in the air right now. So with that being said, I want to look into some macro cycles here to kind of figure out what may happen next. And truth be told, again, no fluff, just straight to the facts. You may like this or you may hate this, but I'm just going to try and prioritize reading the charts as they are. How you interpret them is entirely up to you. So first of all, global liquidity. This is Bitcoin's price, obviously, and if we pair global liquidity and blue over it, we get kind of a glimpse into what may happen next. This is with a 76-day lead, which really hones in the correlation to above an 80% here, which is very good. Before it was a 46-day lead, this seems to be much more accurate, and what we can expect next isn't Great. This massive move down here in global liquidity came right after the initial push, which was the exact top of about $106,000, $108,000 for Bitcoin's price. Now this, as you can see here, has fallen substantially back down to these levels in global liquidity, which just so happens to be these sort of levels here for Bitcoin. So pretty much the previous all-time high levels. So yes, this could get quite hectic. We'll look at some support levels here in just a moment. That is not ideal. And along the way, we do have some fake outs here. So just keep that in mind. Bitcoin's price may jump and come down a couple times before again finding that bottom. The good news is, by roughly speaking, according to global liquidity, about March 28th, March 29th, so in about a month's time, we can expect this to go up again to the rough sum of about 40 to 50% of the previous move. Now, that previous move brought us from about $54,000 to, again, about $110,000. So we could see a jump, depending on where we fall to, of course, to probably likely around the all-time high, if not higher. But remember, this is a 76-day lead. So what does that mean? By the time we bottom out here, we'll likely have more information on global liquidity. And I'm not trying to provide hopium, but if it is up further from there, we can expect this to truly find a bottom here before moving up. Now, one other thing to mention as well, another sort of cycle, this time it's the business cycle in the US. This is a great way we can also gauge what may happen, because this essentially surveys some of like the top businesses in the United States and just pretty much puts the finger on the pulse for how well they're doing over the last month. And as you can see here, we've actually broken above the middle ground here, the neutral score of 50, which we haven't done here since all of the last few years, since about the end of the previous cycle, so November 2022 up until now. This is a great sign to see. Now, paired this with global liquidity, this could be, again, a sign of what is to come. Over the next month or two, things can definitely get a lot better. I'm not trying to fill you with hopium, I'm just reading the charts. But this is also a survey. So obviously with the tariffs being implemented here soon, and again, a lot of the world's kind of de-risking from a lot of these equities, we could find that this somehow has an impact within the US economy to the negative, and therefore things slow down, therefore businesses slow down, therefore and anything could possibly happen. We also have the whole issue over here with QE and QT and whether that may actually happen or not. There's a whole bunch of macro factors that you must consider here. This is just two very rough gauges that just so happen to be, as you can see here, kind of syncing up to Bitcoin's cycle. So kind of like overlaying what I do think to be the much more accurate cycle to what this cycle will be, which is 2017, and overlaying, again, the M2 money supply like I showed you before in blue, and also this PMI index. We can see some correlations, I think, happening also with Bitcoin's price action. First of all, in that sort of last bear market, or essentially in the lead up to that massive bull run we had over there in 2017, you can see here, we had this ascending channel that we were in, and we kind of came into this, you can see here, with 5 touches initially on the top and about 4 on the bottom. I mean, we had a little bit more, a little bit less if you want to count these wicks here, but essentially, as far as I'm concerned, 5 major resistance touches and 4 major support touches. Going into the current time as well, we have sort of a very similar thing playing out. It's also very eerie to look at how we actually entered the channel as well, leading up from the last bull run. You can see here we kind of came down, touched this top of the, I guess, resistance, but at the time support channel. We came up, we came down, we finally accepted we were down, tried breaking out again, coming down before going up to the first push. Now, look at this. This is kind of freaky. Again, back in 2017, we came down, up, touched, came up, came down, touched, consolidated, came down, tried to come up again, accepted it, then had that first touch. So, I mean, you can pause the video yourself and have a look at how closely these two are correlated. And again, this isn't to say that, you know, based on history, it's going to repeat the exact same. But again, it does have a kind of pattern of rhyming, doesn't it? But what I noticed was if you pair up global liquidity and, again, this PMI index, we're actually, roughly speaking, probably more so towards this 4th touch over here than the 3rd touch we're experiencing in the middle. Particularly interesting because this 3rd touch actually broke out of this resistance line, whereas we did this on the 2nd line, you can see over here. So again, you know, this could have been the 2nd touch in the previous cycle. This might be the 3rd official. Again, you know, we can sit here all day and draw similar conclusions. But what we're looking at, again, mainly is the 2 charts beneath it, the 2 other cycles. And you'll notice, roughly speaking, around this fourth touch in global liquidity, we came down from the highs, and then we came down quite hard, and then we came up again, breaking through that here. At the same time, we broke through the top of the channel, which is this green line, which is, again, pretty much us sinking the global liquidity. Now, looking at the PMI index here, this entire time we entered the channel to when we exited was basically a giant U shape, which is exactly what's happening right now. This sort of U shape has begun to play out. Interestingly, midway through this particular ascending channel we're in, we kind of had this little push. This little push here happened to, of course, coincide here with the breakout in this resistance line, which again was this sort of mid breakout we experienced here as well. So those lined up similar as well. Once we touched that line, we just broke straight out, which of course caused that entire bull run. That was the exact top we experienced over here. So again, we kind of are experiencing that a little bit right now in the current times. We've just broken out of that sort of like mid-index pump. So like, again, these things just seem to line up. You can also see here with global liquidity at the current times that we haven't quite broken out yet from the previous highs, but that would also line up, roughly speaking, with the end of this particular channel, which would make sense as well because the lows in global liquidity here, which will roughly speaking be the fourth touch here on the support line, lines up with the exact low here of this fourth touch on the 2017 support line, leading into, again, once breaking through that, the exit of the channel. So you can see here, if we break through this here, it could very well be that last and final push above the resistance line on this channel. But as I said many times, guys, I'm not a technical analysis, right? There are some sort of channels and comparisons you can actually draw here on the global liquidity to maybe disprove or prove certain facts about what may happen here in the short term and the midterm with Bitcoin's price and how that may sort of coincide or differ with what happened back here in 2017 based on, again, some of these global liquidity trends. But all I'm here is just to kind of present some of the facts with you. But as I've seen so far, I am a fundamentalist, so I do like to look over patterns, look at fractals and so on. And this does seem quite interesting. Like, I mean, you know, past price action is never an indication of future performance, as they say. But it's just uncanny, some of these relationships. And again, we do have some macro variables and these looming clouds to consider. But I think all in all, it kind of puts me in a state of mind, long-term thinking here, that we're more so in disbelief. But what I'll leave you here on this sort of topic is just watching Ben Cohen's recent video. I don't normally recommend videos for you guys to watch specifically, but this one was an absolute masterclass, I think. Ethereum finally going home. The title's doubled up here. It's definitely worth the 38-minute watch. Trust me when I say that. To give you a pulse on the market as well, and this does have something to play in here with the recent crash we've experienced, Bybit, as we know, who are hacked for $1.5 billion worth of Ethereum, managed to scoop up the most liquidations of any other exchange in the recent dip, with about $570 million in long liquidations in just 24 hours. So obviously this is a good thing because they're paying back their creditors and these loans won't become a problem, but we know that these loans won't be a problem regardless because they have enough capital to pay back the creditors anyway. So why do it with your own money when you can do it with the tears and the suffering of retail? And again, just to save myself from any sort of litigation, I'm not insinuating it's Bybit that did this, but as we know, the markets are heavily manipulated. So it almost seems like this move was so heavily fabricated, almost like a snowball being pushed down the hill as a liquidity grab to maybe help one party or another maybe pay back some creditors. I'm not too sure. Again, I'm not trying to insinuate anything particularly, but Rover also seems to agree, and so does the liquidation heat map, particularly on a certain exchange in a certain pairing. I mean, shooting up immediately after a hack here quite quickly, taking out a whole bunch of shorts and then falling to take out a bunch of longs, again, like Rover shows here. Also on the Bitcoin pairing, as we know, the Bitcoin chart isn't looking too hot right now. So yeah, it definitely seems fabricated, and be careful with that because global liquidity is also going down as well. So it's not as though that this move wasn't going to happen. Of course, it was almost ready to happen. Now, there is, I guess, a silver lining to this, even though that really is kind of brazen to say. I do believe that these whales will eventually, and these manipulators, want to make some money, obviously. So they'll probably want to push the prices up. Considering we have a monumental amount of bullish catalysts, I don't see how they wouldn't want to leverage those bullish catalysts to send Bitcoin to some ungodly amount of price, as well as, of course, altcoins to follow as well. Keep in mind, these centralized exchanges and so on are accumulating a lot of altcoins at these times as well. They also have the pressure of a lot of VCs as well, who are in cahoots with these guys to make money. And the VCs are down on their investments right now as well. In other news, not so much good news as well, David Sachs here, the crypto and AI czar, has mentioned that the SEC has released some guidelines and guidance that meme coins are not securities, but in fact, they're collectibles. What does this mean? That means that I guess I get the free pass. I don't like this. I'm not a meme coin fan. And as a matter of fact, I actually think that this has been in part due to some of the reasons why the market hasn't been performing too well recently. I think people put too much weight on it single-handedly being the reason the market hasn't performed. Most definitely, I think a lot of the money sloshing around the pump fund coins and the meme coins are degens, and degens fight with degens, and that's not most of the market. Okay, most of the market don't think like that and do that. But it also, in that sense, I think has impacted slightly because some of the degens haven't been investing in some of the top coins as they would in history. And there also has been some regulation, though, preventing public officials in the US from actually issuing and endorsing meme coins like Trump. That's, of course, a good thing. I think many of us agree that Trump coin, Melania coin, was the start of, I guess, the shitstorm that has eventuated since then. So, okay, this is a good thing. Bitwise CEO Matt here has also said that this is likely going to usher us into a new era where we're going to see some of the old school, coins, again, like the coins with utility, so to speak, begin to pump. And that means that the pump fund coins and all the rest of these like sort of degen meme coins hopefully die off. I think this is the beginning of a new era. But again, I just can't stamp that with absolute certainty because of, again, this sort of news here. I mean, things might pick up and we are still seeing some celebrity coins launching at a much slower rate, but they are definitely there. As of January in 2025, 6 million meme coins were launched on Pump Fund. So an astonishing amount. But like I said, you can see here, these are decreasing rapidly. Actually, some of the more recent numbers, you can see today, there were only 68 graduated tokens on Pump Fund. So you can see how fast these coins are just diminishing and diminishing. Like Darky says here, can we all rotate into utility projects and bring on the alt season? So some of those support levels I did mention briefly to you before are eyeing off here the MBRV extreme deviations. I think a very key level is always this mean level here in the yellow. Price likes to stay around that level in a bull run. This green level is a great level of support. The blue is a even better level of support. And you can actually see these plotted out here on the recent price action. So of course, the red and orange are always levels of resistance. And that actually did give us those resistance levels around $108,000 Bitcoin price. This turquoise line here was actually the initial level of support, but like I said before, they're just blowing past all of these levels. This blue level right now, again, is a great level of support. The next level I'm eyeing off here is $72,000, which happens to be this level right here, this short-term holder low band deviation level, which in history as well has always proven to be a great level of support. And you can see price doesn't always go beneath it like it did here in the pandemic. It did for a second, but once it goes beneath it, it is very quickly eaten up. Like you can see this extreme deviation bands here as well. This blue line is a great level of support. I would probably expect lower at this point just because of global liquidity, of course, trending down. Altcoins have also broken beneath a key level of support, but we are still in a much more macro ascending triangle. I think for the most part, though, altcoins are at such lows to the point where they are finding a high level of support amongst the long-term holders, including myself. It is a massively difficult thing to kind of comprehend because, I mean, Near Protocol being at $2.86, for example, I mean, ICP, $6 and so on, it's kind of a bit of a kick in the guts considering we've been accumulating now for the last year and a half to only have prices fall lower. But I think a lot of lessons have been learned, and I've got a video I'm going to be bringing out in a couple of days highlighting the plans for the next cycle based on the lessons we've learned in this one. We're all human. All we can do is learn from these mistakes and I cannot stress this enough, not make them Again, that goes for those of you who are too risk on without being tolerant of that, like I mentioned at the start of the video. So with that said, guys, thank you all for watching this far into the video. I hope you have enjoyed. Let me know what your thoughts are down below, bullish, bearish, or just out of the market entirely. Take good care of yourselves, especially now. Bye-bye.